Hello and welcome back to Vitt Sikhya. Let's continue our mini-series of financial scandals. So while researching for some appropriate scandals to discuss in this video, I came across one that highlights the importance of financial literacy for everyone and not just professionals in this field. I'm talking about the payment protection insurance scam in the UK that occurred from the early 1990s to 2010. Let's discuss what the scandal was, its impact on the economy in the UK, the regulations introduced as a result of the scandal, and the lessons learned from it. The PPI scandal was a major financial scandal in the United Kingdom in which millions of consumers were missold payment protection insurance or PPI policies. Now, the PPI policies are designed to protect borrowers from financial hardship if they are unable to meet their repayments due to illness, unemployment, or any other unforeseen circumstances. However, between the early 1990s and 2010, banks and other financial institutions sold PPI policies to many consumers who did not need them or who were not eligible to claim them. In some cases, PPI policies were sold to borrowers without their knowledge or consent. In other cases, borrowers were pressured into buying PPI policies to be approved for a loan or credit card. And in many cases, borrowers were not given full and accurate information about the PPI policies they were buying. The PPI scandal came into light in the early 2000s, and it led to a massive public outcry. In 2011, the Financial Services Authority, or FSA, fined the UK's biggest banks £1.4 billion for mis-selling PPI. And in 2019, the deadline for consumers to claim compensation for missold PPI policies passed. By the end of the PPI scandals, banks and other financial institutions had paid out over £38 billion in compensation to consumers. This made the PPI scandal the biggest consumer redress scheme in the British history. The PPI scandal has led to loss of trust in banks and other financial institutions. This made it more difficult and expensive for banks to borrow money and lend to businesses and consumers. While the scandal did harm the economy of the UK, there was a little silver lining. The PPI scheme has led to a boost in consumer spending. Consumers who have received compensation for missold PPI policies have used this money to pay off debt, save for the future, or spend on goods and services. The PPI scandal has also led to an employment boost. Tens of thousands of people have been employed in the claims management industry, which has processed the PPI claims on behalf of consumers. The PPI scandal led to several new regulations being introduced in the UK, including number 1, the Retail Distribution Review or RDR. The RDR, which was introduced in 2012, was a major overhaul of the way the financial products are sold to consumers. The RDR introduced new rules on financial advice, including requirement that all financial advisors must be qualified and independent. Number 2, the Financial Services Act 2012. It created a new financial regulator, the Financial Conduct Authority or FCA. Now, the FCA has a broader remit than its predecessor, the Financial Services Authority or the FSA, and it is responsible for regulating all aspects of the financial services industry. Number 3, the Payment Protection Insurance or PPI redress scheme. This was a voluntary scheme set up by the UK's banks and building societies to compensate consumers who had missold PPI policies. The scheme ran for 8 years and it paid out over £38 billion in compensation. In addition to the above, the PPI scandal also led to many other changes in the way the financial products are sold and regulated in the UK. For example, banks are now required to provide more information to consumers about the PPI policies they are buying, and they are also required to assess whether consumers need and can afford PPI before selling it to them. The regulations introduced after the PPI scandal have helped to reduce the risk of future mis-selling scandals. However, it is important to note that no regulatory regime can eliminate the risk of mis-selling. Consumers should always carefully research any financial product before buying it, and they should seek independent financial advice if they are unsure about whether a product is right for them. The PPI scandal was a major financial scandal that had a significant impact on the UK economy and consumers. The scandal also had some lessons that can be learned from it. One of the most important lessons from the PPI scandal is the importance of consumer protection. The scandal showed that the consumers can be vulnerable to mis-selling, particularly when it comes to complex financial products. Regulators need to have strong consumer protection rules in place to protect consumers from mis-selling. The PPI scandal also showed the importance of corporate responsibility. Financial institutions have a responsibility to act ethically and responsibly when selling financial products to consumers. This means ensuring that consumers are fully informed about the products they are buying and that they are not pressured into buying products that they do not need or cannot afford. The PPI scandal also highlighted the importance of regulatory oversight. The scandal showed that regulators need to be vigilant in supervising the financial sector to identify and address potential problems. Regulators also need to have the power to take effective action against financial institutions that break the rules. Finally, the most important lesson from the PPI scandal is the importance of financial education. Consumers need to be educated about financial products and services so that they can make informed decisions about whether to buy them. Regulators and financial institutions have a role to play in educating consumers about financial products and services. So that was the payment protection insurance scandal of the UK. I hope you understood the importance of Vitt Sikhya or financial literacy from this case study. Sometimes the big institutions may also not be working in favor of the public at large. And that is where our knowledge and awareness comes in handy. If you found this video helpful, please do give it a thumbs up and please do subscribe to our channel for more insightful content from the world of finance. Thank you for watching. See you soon again.